The Canadian Agri-Food Policy Institute is driving bold policy solutions for a resilient Canadian agri-food system and building a stronger future for Canadian agriculture. Visit capi-icpa.com to discover how.
Okay, let's get after the markets here as we are into the first week of first full week in January 2026. Joining us to talk about everything on this Real Ag Market segment is Neil Townsend of GrainFox, based out of Winnipeg, Manitoba. Neil, how are we doing?
Good. Just wishing everybody health and happiness in 2026.
Man, I hope the markets are set up for a better year than the season the Jets have been having, my friend.
Yeah, exactly. I mean, I think that one phrase that's sort of come out a little bit lately, just looking at the world global situation for grains and oilseeds and even pulses, is sort of that terminology lower for longer. Like we need something to happen to kind of spark us. It could be on either, the supply or the demand side. The demand side looks a little tenuous right now. I mean, we just don't see the sort of growth motivators that we want. I mean, we have risks on the how big is biofuel going to grow? We've got a lot of policy issues, particularly south of the border, where we have no U.S. farm bill. And really, I mean, I think the directionality points to probably more headwinds for biofuels than tailwinds. And so, we got a lot of question marks. And then on the supply side, I mean, we're in a scenario where if people perform at or near trend, I mean, that's just more added to the piles. And also, I think probably a little bit of concerns too about maybe the Chinese in particular doing a bit of stockpiling, like buying maybe more than they need of things and giving themselves like a bigger cushion when they do maybe need to revert to being an importer.
Yeah, and I think as of this morning, China has crossed the 10 million metric ton mark on soybeans of that 12 that they are trying to get to, according to the details that the limited details we have on that U.S.-China agreement. I guess let's just, before we look ahead, let's talk about the end of last week, what happened in Venezuela, and the market reaction here early this week. Is there anything that sticks out to you?
Yeah, I mean, what sticks out to me is how preposterous the market reaction was. I mean, I know you're based in Alberta, and I just in terms of the many of the companies that are based in Alberta, the oil companies and their stocks going down 5 to 10%. I mean, that worries me when the market starts to react like that, because it doesn't make any logical sense to me. What we know about Venezuela is that there's been years of neglect in their oil industry, right? It's going to take them, billions and billions of dollars and several years to kind of get their oil industry back where it can really start flowing oil out, back to the pre-Chavez days of 3.5-4 million barrels a day. They're down at around 1 million barrels a day. Sure, they produce the heavy oil, but I mean, I've seen some estimates, just the money that needs to be spent in Venezuela is like $100 billion, and maybe to get it so that it can readily flow to the United States is more like in the $300 to $400 billion thing. Like, who has that money at a $58 barrel of an oil? It doesn't make any sense. And I just think what worries me is not so much all of that. I'm no expert in those areas, but it worries me that, they capture them on a Saturday. Trump says we're in charge of Venezuela, whatever that means. Nobody knows. They're still debating it. It's Tuesday. It's the afternoon. They're going to debate it all week because nobody knows what that means. And the market has, something like 36 hours to think about it before it opens. And they think, oh, you know what? I'm going to take Canadian oil stocks down 10%, 5%, 7%. And that worries me from a grain context. It says that, are we that queued up for looking at the negative, looking at bad news, and not looking at really, what is before us? Because what's really the story about Canadian oil and gas right now is that we have large net exports. We've been expanding markets into places like China, Japan, etc. And even at a $58 barrel in oil, these companies are very profitable. They're doing very good. I mean, a barrel of oil could go to $40, but the price of oil did not react in any way, shape, or form to the Venezuela news. It basically stayed at where it was. So again, this always makes me nervous that, there's a lot of different actors in this. And, if, for example, we see an end to hostilities between Ukraine and Russia, Is that going to drop wheat prices by $1 temporarily because people will be, oh, suddenly like there's no, like they've been exporting wheat. There's been no problems there really.
Right.
So, but this is the market reaction that kind of gets me nervous going ahead. And again, it's probably a symptom of a bigger problem in that people just don't trust what they see with their eyes right now, right? And we have a good news story, I think, about oil and gas from Alberta or Canada in general. And people are like the stocks have been pretty resilient despite the lowering oil price. But I mean, I don't think the Venezuelan news was the catalyst to send them down like that. And again, if we're so sort of like spring loaded, ready to react to the news flow, one thing we can be certain about 2026 is we're going to get a lot of headlines that could make people nervous or anxious.
Yeah. I think on the capital investment front, you bring up some good points about the cautiousness around making that level of investment. It's like this, there's a little bit of it's going to require a bit of a gold rush mentality, right? There's clearly a lot of oil there. Okay. That's well established. There is immense political risk overlaid on top of the duration required to get to actually getting back to those 3 million barrels a day where they previously were, because the infrastructure is so decrepit. We're like 50 years of decline. The charts I've seen this morning are incredible in terms of what the decline has been. And where oil currently is trading at in the short term, there's going to be some cautiousness. And of course, the president's goal here is to drive oil prices even lower from an affordability standpoint at the pumps, which is working against those companies that you're actually asking to put the dollars in the first place. And so there's some complexity to this. And what I'm watching for is, it's not companies that make announcements on the spending. That's the easy part. Anybody can send out a press release, right? To be on side with this. It's actually high hose running. It's things being built. That's what I think we need to watch as a bit of a signal. I think there's going to be some money invested. The question is how much and how quickly, and does that meet the president's timeline? And if it doesn't meet the president's timeline, what are the follow-up consequences from that? Those are the kind of the way the variables that I'm watching.
I agree with that.
Yeah. Okay. So before we move into 2026, what disappointed you from a market perspective on 25?
Well, I mean, a lot of things disappointed me. I mean, I'm not a big fan of tariffs and all the sort of trade wars, both with the United States and with China, and the trade regime that we have to deal with going into India is very fluid all the time and beneficial to India. Obviously, that's who kind of sets the course there. But I would say if I had to highlight one of them, I think the one that sort of struck me a bit was the failure to get any tangible forward motion on the issue with China. It seems to me that if you just look at it in a geopolitical kind of game theory sense, Canada and China should be somewhat aligned to kind of try to make an arrangement between the two of them to foster better relationship, to have a better trade deal, because they're both facing some adversity on the U.S. front. So I mean, they don't have to shove it into the U.S.'s face, but I'm just saying I think that why fight a multi-pronged, multi-front war when you can kind of focus on one thing? I'd say a second thing that sort of disappointed me was, it sort of surprises me, is just the hostility and antagonism that came out of the U.S. administration towards Canada. I'm not saying that there's everything is smooth with the trade arrangements or anything like that. I mean, there's probably some valid disagreements on that side that could be looked at, but I just think that the overall tone of sort of that was negative, and I think U.S. benefits greatly from Canada, and I think Canada benefits greatly from being, next door to the U.S. And I would have liked to have seen just, an agreement to disagree on things, but to do it in a very civil manner and to do it in a manner that goes forward. And I think if that kind of concerns me from a Canadian front is that, we've had good relationships seemingly with the European Union and Mexico and other countries, but I'd like to see us kind of forge a better pathway with China and the U.S. We don't want to roll over, but I think we need to have those markets to sustain what we're kind of doing in Canada, in particular Western Canada for the agriculture. I think that, we need market access to China, we need market access to the US, and we need market access to India, for example, those three countries. And I think anything that sort of facilitates that, and maybe could be if I had to, go way out on a limb, I'd say maybe a better strategy with those countries where it's not so piecemeal. It's a little bit more longer term and a little bit more, let's work together to solve problems.
I think a lot of farmers would agree with that. Okay, Neil, I'm interested. I don't know if it's predictions or things that you need to see out of this market here in 2026. So when we're here a year from now, you're like, what a year. I guess what's top of mind for you?
Well, what's top of mind for me is that I think that we're going to have a fear of volatility. Whether volatility actually emerges or not, I don't know. But I think that people are going to be scared about big market swings, both in the geopolitical spectrum, in the macroeconomic spectrum, and in the commodity markets as well. And the reason why I call it like the fear of volatility is people will be, they're going to be second guessing. They're going to be saying, oh, I think the market could go down, it could go up, it could go down. And that could cause us to sort of, uh, be despair-based traders, meaning like, you know what, I'm just going to sell it because I'm worried about the downside too much. And again, I'm an incremental seller. I still think incremental selling is going to be the best, policy going forward. The second thing I would say is on the commodity front, I mentioned it already in the first segment, just that, we probably need to see something, either incremental demand or some sort of supply shock, like a negative supply shock. I think it's less likely we see incremental demand, like a sudden growth, like, oh, there's a taste for this, and then, more is demanded so that we see prices creep up there. I think it's, to really get a fundamental change in the price of wheat or corn or soybeans or canola, we probably need to see some sort of, weakness in the weather somewhere, and hopefully, not Canada. For some of those commodities to make a really, really significant move, I think you'd have to see like, for wheat, for example, I think you'd have to see like a poor Russian crop and maybe like a U.S. winter wheat crop that comes in below trend. Like you might need two to really kind of cement it into a channel that really gets us much higher. So if you say that it's unlikely that we get incremental demand and, you'd have to say the probability of a supply shock is somewhat, smaller than 50%. Then you're looking at, okay, well, what is the current situation? And today is going to be a little bit like tomorrow, right? Tomorrow is going to be a little bit like today is probably the way you want to say it. And that just means that I think that, prices are going to chop sideways and, not really go too much higher or too much lower, unless either we get some sort of geopolitical, macroeconomic, or as I mentioned, like, a fundamental shock, which, you can debate how likely all of those are. But overriding that, going back to my first point, is where we may see some opportunities and some risks is that the market might overreact because it tends to be a little bit scared right now. It's scared of the unknown. It's scared of this potential volatility. So if we see some, statement from Trump that scares the market, or if we see some behavior from China that looks like they're, saber rattling about Taiwan or something like that, or we see some pronouncement about trade from India, you could see the market maybe react a little bit more than it should because of this, what I would say is a little bit of fear that's just overriding everything, and the fear that there is going to be a lot of volatility. And sometimes it becomes a self-fulfilling prophecy where people kind of think that something's going to happen. And, there's a lot of signals that it's gonna happen to them, and then they act as if it already happened. And I think 2025 is sort of a good example of that, because throughout the whole of 2025, on the stock market or the financial markets, there was a lot of fear, and people were, oh yeah, there's going to be a big sell-off, there's going to be a recession, there's going to be this, there's going to be that. And there were several days during the year where the market tumbled by 3, 4, 5%, but it never actually got into a channel where it actually created recessionary kind of conditions. And in the end, the stock market and the financial markets were up 10, 15% on the year. And, we're having an okay start to this year. Now, that's not the price of wheat. That's not the price of canola. I understand that's not the price of durum. But I'm just saying that, I think we'll see that type of, fear-based volatility. But in the end, we might not see much of a price change.
But with volatility, though, can also bring opportunity, right? This is why I think we've got to really pay attention. Like, I'm not saying you got to be like following the minute to minute of the market, but maybe you want to narrow your duration range a little bit, like not be checking in the market where the wheat price is once a month, maybe doing it a little bit more frequently to make sure that when there is that volatility and the market is overreacting, and it can overreact to the downside and overreact to the top side, that you're able to pounce on that and do some of that incremental work like you were just talking about. If you're only looking at it month to month, you may really miss some opportunities out there if the market does bring us some of that volatility.
Yeah, correct. I mean, volatility can be positive or negative. And I'm just saying, like right now, I don't, if somebody woke up and said, oh, canola is trading down 5 or 6%, I'd say, well, I don't really understand. Is there any headline news? There's no real
Yeah.
headline news. Is it something to do with soybeans? But, if it's the opposite, if it trades up 5 or 6%, I mean, at that point, I might say, okay, like I don't see the fundamental reason why it should be trending higher. So if it goes up 5, 10% over a week, that's when you might want to de-risk and take that
Yeah.
opportunity, right? I just think that, I know you have a lot of family involved in baseball. And, like you can score runs a lot of way. The modern way is, you swing, you strike out, or you hit a home run, right? But in the old days, you used to manufacture runs. You used to like, hit a guy, get a single, bunt the guy to second, maybe do a sack fly to get him in from third, that kind of thing. And I'm just saying, in the current market conditions, that's sort of how I think we have to approach our sales and approach kind of
Mm.
making our opportunities is that, it's not going to be a clear cut signal that, oh boy, like the market is trending up. We just got to try and hold on long enough so that we don't sell on the downside of the upswing. It's more like, okay, why has it moved this week? It's gone up 5 or 6%. Is this a sustainable move, or is this just because some piece of information sparked the market higher, and that information is going to ebb, right?
Yeah, but based on some of the trade flows and some of the prices relative to input costs and some of the concern out there in the cropping sector about profitability, do you see any big shakeups as we sit here right now, first week of January? Any big shakeups on the 2026 crop mix?
Well, that's a great question. I think we can go back to something we were talking about earlier about the Venezuela situation where, there's a lot of investment that's needed. Like eventually you can bring way more barrels onto line from Venezuela if you spend the money. Well, we have sort of the opposite problem in the world of agriculture, right? Like people have invested a lot of their money. They have their land, they have their equipment. What are they going to do? Like farmers want to farm, right? And even though there's a lot of areas of the world, and you can see this if you go to YouTube and watch a lot of what's happening to some US farmers or even some Brazilian farmers or some European farmers, like a lot of them are stressed on profitability or even break even. But does that mean that in 2026 some of those farmers are going to say, you know what, I'm just going to sit this one out, I'm not going to plant? No, I think that right now where we're at in the world, and this is part of the problem in the commodity space for soft commodities like grains and oil seeds, those types of things, is that where people are going to try to yield their way to freedom, right? So what right now farmers are doing is they're going to stick to probably in Canada, I think they're going to stick to their rotations. In the other parts of the world where it's a little bit more monoculture, like they're just planting soybeans and corn or just wheat, or, like they're not doing as much of a mixed farming approach. They're going to plant their acres, and it's not going to be fence to fence. It's going to be ditch to ditch, like they're going to plant every available acre. And I think in 2026, there could be some mild cutbacks in terms of how much inputs they use, but I don't think we're going to see a big swing in input usage. So I think that the main goal here from your Brazilian, your Argentinian, your Chinese, your Indian, your Canadian, your European farmer is going to be maximize yield because they don't see the price saving them. It's going to be, I need bushels. And, we just had that happen in Canada where, prices haven't performed where they wanted to, but we had a combination of good weather and good farm practice. We had some really great yields in 2025. And I think that will mitigate a little bit of the sort of negativity around the trade situation and a bit of the negativity around the overall pricing situation, both in terms of your output prices and unfortunately the input costs.
Yeah, I think in the U.S., I think the cropping intentions with corn and beans presents a really interesting discussion. And we've got Krista Swanson, chief economist with National Corn Growers Association, on the show here later on today. Looking forward to talking to her about that. In Western Canada, are peas maybe the crop that faces the greatest threat? Because, we're talking tariffs with India and China, or is it, people scared off about canola? Like, I guess which one of those crops do you think is the most under threat for an acre reduction?
Well,
Or none
that's
of
a great question because, okay, the short answer is I don't know because here's my thought. Like, I think if this were 10 or 15 years ago, we'd see a significant decline in pulse acreage. But I
them?
think that there's been a little shift in farm practice in those 15 years where the pulses have become sort of an integral part of like, maximizing usage of the land and even like productivity practices for canola and other crops, right? So I don't know if we'll see I think people will probably shift around a little bit in the pulses. But yeah, certainly I think as it stands now, like, we're going to have a heavy carryout in the pulses. And if we get, 90% of the pulse acres that we got last year, which is entirely probable, I mean, without some sort of crop production failure in India or some help from China to just suck up a lot of the yellow peas, which isn't a guarantee by any stretch of the imagination, I would say, yeah, the pulses would end up being, a little bit stressed. And again, I would be very curious about, I think you said it's Krista Swanson,
Yep.
about the corn soybean mix because, it looks like they're going to plant a lot more soybeans in the US. I mean, that's not an immediately obvious thing, but I mean, this is the nature of sort of, when you get a very large corn acreage one year, it usually tends to lead to a bit more soybeans the next year, right? So,
Yeah,
although from a trade standpoint, I mean, the US
yeah.
has been quite successful at shipping corn this year.
Exactly. Right. And there's a whole bunch of different, if I was to think about a crop the most under threat from a supply perspective, and the fact there could be a lot of it is soybeans because of the challenges with China. And do they live up? Obviously, they're getting closer. They're at 10 million metric tons of the 12, but there's going to be all the discussion about the 25 million
Yeah.
metric tons that have to be shipped. So and some people say without those agreements, the number could be zero. And when I overlay that on Canadian canola, I'm really curious at the end of the day how much canola makes its way to China, whether that's directly or via other routes. Before we finish up here, any thoughts on that?
Yeah, I mean, I definitely think that at the end of the day, one key number that we're going to have to watch very carefully is the export number from Canada for canola. And obviously, to date, it hasn't performed very good. And as you say, like, is China, if China takes an equivalent amount of canola that they took last year, they'll have to get most of it from Australia through their, direct means and maybe, indirectly from Canada in a processed way or something like that. I don't know. But I just say that, like, the world doesn't produce that much canola that, they can have Australia divert like all of their exports to China, like 4 million tons. And then, that 4 million doesn't have to be made up anywhere. So you would think that Canada would sell some canola, incremental canola to places like the UAE, the European Union, and other places, sort of backfilling for Australia. And that would be relatively positive. But one other thing I wanted to say quickly, just before we leave here, is, and you kind of mentioned it, like if we wanted to look at sort of one area where we could change the paradigm and change the situation, it would probably be the US corn balance sheet. So it would take a few things. I think the first thing, we need to see just a small incremental amount of upside to their trade or to their usage internally in the US. So say they use 200 to 300 million more bushels. That's not totally impossible between like, domestic disappearance and exports. And then if they do plant sort of, just 90 million acres or even below 90 million acres, and we get instead of like, a trend yield, if we are sort of more in like the 170s or something like that, or even, the high 160s, then all of a sudden, if they try to export the same amount that they exported in 2025, 26, you'd be talking maybe about a sub 1.5 billion bushel corn carryout. And so maybe this time next year, we'd be like, oh, they have to incentivize people to plant more corn because we need corn because the corn situation is getting balanced. And, corn's sort of it's the tide that rises all, like lifts all ships. So that
Yeah.
would be one thing I'd say that, it's not going to happen overnight, but if two or three things happen, we could get into a situation where come July or August, we're talking about a potentially interesting corn balance sheet to end the 25-26 marketing year.
Oh, always stuff to talk about when we talk about markets. Neil, thanks so much for joining us here today.
Yep. Thank you very much.
For the latest ag news, agronomic advice, and more, check out realagriculture.com and Real Ag Radio.